Hey traders, welcome back to this video series. We're talking about candlestick patterns, and now in this video I'm talking about 3 black ravens. But wait, hold up, I might hear you shouting at the screen. I've just found out that it's actually 3 black crows. So for the past 15 years I've been calling it wrong, but hey, who cares, right? If it's making money, it doesn't matter, right? So 3 black crows. Let me correct that before we shout at the screen. So what is this pattern? What it's all about? Generally, this is the kind of textbook approach to it, and let's look at the actual real world example of it. So you have a big candle to the downside, and I'm going to put that as black because it's black, but actually it would be red if you've got red on your chart. It's basically a candle that the open is here and the close is down here, so that's going to be colored in black. Then you have another one here, and the important thing is with this one is that the open is above the close, right? That's where you get the strategy from. There we go. So there's our 3 black crows. Nearly said ravens again. 3 black crows. What's the point of it? Why does it all work? What's a candlestick pattern? What does it mean? Generally, again, this is a bearish reversal pattern. The point is that we have an uptrend, and now we have aggressive sellers hitting the market from the open, going from high to low intraday. That's your intraday pattern. That's what it looks like on your daily chart. The next day, you get a gap up. This is the important part. You get a gap up in the market. However, straight away, sellers are perceiving that as value and they are hitting it, and you're getting a move to the downside again. The third day, you get a gap up and sellers are perceiving that as value and you're hitting it to the downside. The point is as well, the extra little attributes to this is that these little tails here, or wicks, are very, very small. In other words, maybe it opens and tries to have a little go, but fails immediately straight away. This body is long, so you've got a long high to low move 3 days in a row, hence the 3 black crows. And it occurs kind of at the end of an uptrend. And now if we have a look at the official line for this, it's basically saying to us 3 black crows. It's showing us that each candle should open below the previous day's open. So okay, while it's above the close, it's definitely got to be below the previous day's open. You can't have that candle open up there. That will not be an official 3 black crow. Ideally in the middle price range of the previous day, so they are saying officially that it should be in the middle price of the range. Each candlestick should also close progressively downward to establish a new low. Yeah, we got all that. Indicates a strong price reversal from a bull market to a bear market. I think that's a bit extreme to say that every time we see that it's gone from a bull market to a bear market, but I get the logic of it, and this is why I like candlestick patterns. I like to think about who's on the other side of the trade and why it's doing what it's doing. So just to reiterate, we have the uptrend, we have that big momentum to the downside that comes off a high. That's got to be a new high, by the way. That's something I didn't mention. Solid red or solid black, depending on what you've got, indicating intraday. You've got high to low trend day. Very important that is, because that's an intraday move that's bolted onto the end of a trend, potentially thinking, okay, we could push lower. Now, most people in a bull market or in an uptrend would say that could be a buying opportunity. Is why you have to have the 3 in a row, or at least the second one, and then sort of kind of work off the third. So you have that move. The second day, and this is the important thing, is you get the gap up in the middle of the range. And they talked about being in the middle there, but I think generally I'd probably prefer it to be as low as you can, but still within the range. But the key to it is the fact what happens with the gap. And with any of these things, is price response. It's what response does price have to an action? And the action is 2 actions here. We've come off the high with a solid red. We've now gapped up the next day. The bulls have kind of perceived that as value and said, hey, we've closed pretty low here. That's good value. We're going to go up to highs again. Off we go. Let's buy this all aboard the train for new highs. And they've gone, actually, no, you know what? Sellers are fully in control yet again. We're driving it through the low and we're pushing to the downside. Okay, so how do we enter this trade? I don't know what the textbook says. Let me know, guys, if you know what the official line for entry is. Not that I like to use the official line. I kind of like to front run it a bit, but I'm a little bit more aggressive on my trades. It means that I get stopped out more often, but it does mean that I get a bit more bang for my buck, and it suits my personality. Whatever suits you is the way to do it. So what you could do is you could say here, if actually we redraw that, so that's a little bit neater. If we redraw it from an intraday perspective, should I say, stick the thing there. So we're going from high to low. We've pushed down, there's our close. The next day we open here, we go from high to low. We push down, we open up here, we go from high to low. So that obviously represents that candle, that one represents that one represents that one. Hopefully you can kind of work that out. Day one, day two, day three. So how do we enter it? So after you've got day one, you're alerted. You say, listen, we have got a potential reversal here. Potentially, obviously, if you say, let's just try and cover that up. Can I cover that up on the screen? Like that. If you just saw that, you'd be thinking, well, maybe we're just buying that pullback. You know, at the moment it's a pullback. So you need something else in my eyes, at least to say, hey, that might be my filter to be alerted, but I need a trigger now. And for me, a good place to have a trigger, let me get my red pen out, wherever I put my red pen, there it is. It would be this. You know, as we gap up, we get the push lower here, the solid one, number one. Second, we gap up, number two. Third is we break through that prior low. Now, I know this is a little bit aggressive and it's not the textbook way of doing it, but again, it's my suggestion on perhaps something to look at. Then at least you can say, hey, if I'm wrong, I'm going to come out above that high there. My risk is pretty low. If we do have the three black crows, I said ravens, the three black crows pattern, I've lost my train of thought now, the three black crows pattern, then we've got a good leg in, we've got a good chance of us actually doing it. And maybe if I can wait for the third day, that could be my exit and say, hey, I want to wait for the third day. I want to exit some, so that I've got some from this pattern, and then subsequently, if this is a longer term reversal, beautiful. I've got a beautiful edge in, I'm in early on, I've got a good head start on it, I can let it mature, let the trade pay me, or not take anything out at all, just take that as an early guide. Now obviously, that's ultra aggressive. Many times you're probably going to get stopped out on that, but I like the fact that you can quantify the risk. If you're waiting for the full pattern, you're going to be taking it here. Where are you going to put your stop? Anyone got any ideas? Stick some ideas in the comments below on that, where you would put your stop. I'm just trying to think of a good way, place of putting it that would maybe quantify your risk. I guess if you're looking for a bigger full swing trade reversal, you would have it up above the high, and that may be quite suitable for if you're holding it for several months. That would work out for you. Or maybe you might want a bit tighter, but I guess you probably would want it at least above the high and use that as a catalyst to take the trade short. But let me know if you've got any other ideas on that, where you would potentially put your stop from a swing trading perspective. From a day trading perspective, it all looks very good as well. Have I just drawn on myself with that pen? Hopefully not. Okay guys, that is it for today. If you like this video, please give me a thumbs up. If you haven't subscribed already to the channel, please do so, because you're going to get more videos like this, candlestick patterns, technical analysis, strategy, psychology, discipline, all that kind of good stuff, with one aim is to make us better traders. So good trading guys, and I'll see you in the next one. Take care.